True or false? The old adage says, sell in May and go away. Hard to really go any places with COVID around. But is there any truth to the adage? What are your thoughts? We'll go over that. Is it true that one positive thought a day can actually change your day trading? Is this some Tony Robbins bullshit? Or is there actual truth behind the psychology of positivity? Not only that, we're going to take real emails, unfiltered, unfettered, from Newsbeat Live members. You'll be surprised how many of their troubles and successes might help you get to the next level. I am Mark Melnick, and this is the Newsbeat Show. Thank you so much for reading this disclaimer. Appreciate it. All right. We've all heard the old adage before. Oh, you sell in May and you go away, as if like almost, like you were socially distancing from the market all of a sudden because you sold in May, it's time to go away. How true is that? How true is that? On average, does that really work? So we're going to just go through it right now, and what you see is a very simple monthly. I wanted to put it to the test. I think it sounds like bullshit, but maybe I'm wrong. We'll go over the data together as we're starting our first trading day of May tomorrow. Okay, here is May from 2020. Oh, closed nice and strong. So far, we got 1 point for its it didn't work, and 0 for it didn't. So far, 1 point. That would have not been a good idea in 2020. May of 2019, the market went down. That would have been a good idea to sell in May and go away. 1-to-1. May 2018, a monthly candlestick, was very strong. That would have been a bad idea to sell in May and go away. 2017, another strong May. That would have been a bad idea. So far, 3 times it was bad, 1 time it was good. May 2016, bad idea. That's 4-to-1. May 2015, another green candle, another bad idea to sell in May and go away. So we have pretty much between 15, 16, 17, 18, 19, 20. 5 times it did not pay to sell in May and go away, and 1 time it did. But let's go back a little further. So it's 5-to-1. Oh, here's 2014, very strong close. It's 6-to-1. 2013, another green candle, 7-to-1 for 2013. How about 2012? Ah, there was a good time to sell in May and go away. So we're dealing with 7-to-2. 2011. I mean, the Q's literally closed 60 cents lower, but let's give it to the other side. 7-to-3. 7-to-4. Back in 2010, you had a weak close. 2009, 8-to-4. 2008, 9-to-4, because it closed strong. 2007 in the Qs, closed green right here. It's 10-to-4. 2006, 10-to-5. It would have been a good idea then. Very bad idea here in 2005. 11-to-5. I think the point is pretty clear without going back to 1896 when the market's still open. You know, some of you guys I'm sure were trading back then. But look, here's the bottom line. Adages are usually meant to get stuck in your head to rhyme. Sell in May, go away. You know, you know, trade in June, fart and eat prunes. Like we can make up probably our own adages here, but the bottom line is it did pay to actually not sell in May. If you bought in May and went away, you would have probably been doing a lot better over the past 15 years, considering you bought a major indices or index. So we're gonna before we get to the positives, the psychology of positivity. What I'm gonna do is I'm gonna read the emails. I'm gonna read emails. These are emails. Now, these are emails which are unfiltered. The only service out there, we're the only people out there who don't sit there, filter the emails. We give everyone a chance to talk. We like to keep it real. We're not here to just show you, the good, and the good. We like to show you the good, the bad, and my face will complete the ugly. But with all joking aside, you find me attractive. Don't, yeah, I mean, I know you do. That's okay. Let's go right into the emails. These are live, unfiltered, unfettered emails. I leave your name out at the end. If you wrote your name in the middle of the paragraph, I am reading it because I didn't, as I said, went through them. And if you do want to write me a private email, just write private email in the message and I will not read them here. Mark, but I do keep them anonymous as much as I humanly can. Mark, along the lines of breaking bad habits, I'm doing great at breaking the doubling down habit. Thanks. That is one of the hardest psychological things that most traders have to do. Is that a lot of traders, when they're down money, double down. I have figured out strategies and methodologies which help, which people have told me help them, and definitely have helped myself. Never double down. I don't think there's ever a good reason to doubling down on a losing position. It's just a losing proposition in the long term. Psychologically can destroy you. So I'm glad our psychology and our strategies. See, people don't understand. A lot of you traders. Yeah, I went there. What's up, you traders? A lot of you traders out there. You start to think that you're undisciplined because you double down. You start to blame yourself. I'm stupid. I'm a bad trader. I'm this. No, you're not. You know what? You want to know some other stupid bad traders I met? Doctors, engineers, military, really undisciplined, those military people. Law enforcement, firefighters, EMS, nurses, doctors, surgeons. These people have more discipline in their morning load than you do in your entire body, or most of you do in your entire body. So don't tell me it's discipline. It's a poisonous psychology. A lot of the strategies out there have very toxic and psychologically risky connotations. I'll just share with you one. If you're looking at a chart that's shooting up to the sky or a stock that is plummeting down and you want to short the stock that is shooting up, you see these big green bars and the only thing you're salivating because you know that that's going to digest and go down eventually, right? That has a very negative psychological connotation. What you might not know is it's strategies like that which generally cause people to double down. A stock is plummeting hard. Boom, boom, boom. You get red bar, red bar, red bar. I'll show you. And it's kind of funny because I used to fall victim to this. This is how I know this so well. You see like a bunch of like red bars on a chart. It's falling, it's falling, it's falling, it's falling. It's just been going on all day and boom. And then you're like, screw it. I'm buying in right here. But just as you buy it, it goes down again. And you're like, it has to. I mean, I liked it up there. I gotta like it more down here. And a lot of times when you do buy it down there, I would even say most of the time, you'll start to come back a little. It'll be easy to get to $0. You want to know you want to know something else amazing? You want to know the most common thing for you to do when you double down like that? Is you'll usually take a very micro profit. So you'll buy a stock, you'll be down 500 bucks, 1,000 bucks, whatever your number is. I don't know how heavy you got. 50 bucks, whatever your number is. Let's make a number up. You buy stock, you're down 500 bucks. You double in, you're down 1,200. You buy a little more, you're down $2,600. And then the stock begins to go up. You know what the first thing you do? Because you're trying to reinforce and justify your action, you look over at your P&L and ask yourself if you are better than seconds ago. So you're not even really watching the stock anymore. You glance over at your P&L and L and your average price, and what you're actually thinking psychologically at that point is you want the stock to get to that average price. And once you actually hit that average price, your holding power will usually drop to about a zero, meaning you'll sell out immediately right after. Because the whole point of doubling down was to not make money. The whole point of doubling down was to avoid the loss. And once you accomplish that, you'll usually sell out. So you might have been down 2,600, and believe me, this number could be 26,000 for some of you, 50,000. I mean, the rabbit hole goes as deep as you need it to. And then what happens is right after your P&L actually turns like slightly green. Like you could have been down like, and this has happened to me, like long time ago. Like you could be down like $11,000, and then your P&L is like up 700, and you sell everything immediately. Like, woo, good trade, and you feel this sense of relief, and you feel good afterwards, right? This is why you stay away from certain strategies. So I'm glad this is one of the big boy things as a trader is to not double down on losing positions. I'm looking for a similar trigger to stop a bad habit of random overtrading. What a coincidence. We actually, so psychologically, I actually created a new strategy. It is inside your portal. It is inside your portal. It's labeled as a special video. It's called Newsbeat Show 775 Special How I Made Money Today. And it talks about how I had, I think it was my second best day of the year on Friday. And I literally highlighted how to stop a bad habit with random overtrading because I was trying to think of the psycho. This is such a great email, by the way, and I'm so glad you wrote it, and thank you. So I was actually trying to figure out just over the week, like 2 days ago, what was making people constantly trade. It was actually closer to on I think it was Thursday. I was thinking it might have been 3 4 days ago. You get the picture. Last week or this week. Wait, does Sunday start the new week or is it Monday? God, you ever see those effing calendars? They're like Sunday to Saturday, and I'm sitting there like, who the hell made up the rule that a week starts on a Sunday? Why not a Monday? That's when we all have to go to work, right? Anyway, point being, I was thinking about this and I was saying, how do I stop people from randomly overtrading? Now, Wall Street's way of telling you that is simply you got to follow your rules, you got to keep it in a journal, you have to never break your rules, follow it. If you don't do it, you're not disciplined. That's Wall Street's answer for you. My answer for you is there has to be some middle ground where you could still be a little bit of a crackhead, but not enough to where it hurts you. So I was, instead of like shooting heroin in your veins, I was trying to get you to do something healthy, but constantly like take a bite of an apple or a piece of or a sliced piece of pineapple, like bite a piece of fruit or eat a vegetable so you get the same motion going down. I know I'm comparing heroin to eating healthy. The point is, I think I've overcome that with my last strategy. I have finally figured out a way to stop random overtrading by allowing you to overtrade, but overtrade on a smart idea that could produce you money. So to give you an example, I was, tiered for I think 10 contracts, 10 contracts, which is lower than, what I've been tiering for recently, meaning 10 option contracts for those who are not option traders. It's like 1,000 shares, and I still trade stock too, but it's like 1,000 shares. So pretty much with like quasi thousand, and I put in parentheses 1,000 share positions, I was able to have my second best day of the year doing that. And you know how I did it? I overtraded, but I was overtrading instead of overtrading by constantly doing stupid things in overtrading. Because see, overtrading, it's kind of funny because there's a psychological negative connotation behind the word overtrading. What the adjective you used, which made it negative, was random overtrading. Notice if you remove the word random here, I know this is your email that you just, sent through, whatever. I'm gonna delete the word random and just look at what he didn't do it, but I'm gonna do it. Look what happens when you delete the word random. Over trading. You still have a negative connotation with the word over, right? What if we remove that? A bad habit of trading. See that? See, your bad habit was you were unable to discern which strategies you should do. You're sitting at your keyboard, you press a button. Sometimes I felt when I was over the years, I remember even inside when T3 was at William Street and I was in the William Street office and I'm sitting there like this. I'm like, oh God, what the hell's going on there? I would literally just press a button. Like sometimes you would just want to press a button just to keep your brain awake. Otherwise, it just feels like, like you're in a mental fog at your computer. And that's why it was so important for me to develop this. So I literally developed a new way of looking at the market, which is working for me. Is it going to work for you? I don't know. Check it out first. But something that's going to help me stop a bad habit of over trading and hopefully help others. Oh, this looks good here. Oh, this looks good here. Aha. Yes, exactly. A bad habit of, I'll just retype in what you send the email, random over trading. Oh, this looks good here. Oh, this looks good there. Most of these types of trades end up in losses, and I usually know when I'm doing it, but tend to override it and do it anyway. Thanks for your help. Right. And you're probably sitting there thinking you're either dumb, bad trader, undisciplined. I promise you it's none of those three things. It's none of those three things. So what I did is I literally developed a strategy that will keep you attention deficit disorder, have to press the button on my keyboard, have to keep the brain like jogging along, all wired up and stuff, like me. I developed a strategy for us. And keep your credit card inside your wallet where it belongs. It is literally inside your Newsbeat portal right now. And I want you to watch that video. I just did it on Friday. It's literally Newsbeat Show 775. It's a private video for those watching and you're interested in a lot of the content we do. Um, yeah, we do exclusive content for our members, including strategies that are working in the market. Okay, so somebody took the algo class because the title of this email is Algo Class Questions. I just finished the algo class and I'm working on the homework. I believe I have the basics, but I'm confused on one or two things. Homework, Viacom, 11.220 through 420 ascending support. Buy 5.3. All right, just keep in mind it's never a recommendation to buy or sell, but I'm assuming you want to see if your support was drawn correctly. So let's go to Viacom. You said 11.20. Turn it into a daily. All right, you started at 11.20. You can start here as long as you go down. That'd be the only way to start at 11.20. So it'd have to be the top of 11.20 to 420.21. So you brought this line all the way to April. Um, that 420.21, no? Okay. All right. That is first of all, that's descending support because the first line is higher than the second. And on 5-3, the buy level for that line would be 37.63. You drew a very nice complex line. We're going to go into the psychology of positivity through your trades right after we're done with this. So that's that. Facebook 11.5 through 420. Just do real quick. Do the last one here. I mean, 11.5, that is a good starting point. You can see I have a starting point there. And where did you take it? To April 29th? Well drawn. Well drawn. Beautiful. Yeah, yeah, that's legit. Very good at it. I got 332.47 on mine. It's close enough. 332.58. Well drawn. Last one, Goldman Sachs. And on Goldman Sachs, he's basically asking me to confirm his trend lines right now. So you started at 10:30.20. You'd have to start at the bottom. That'd be the only way it would be legit. And you attached it to 421.21. Uh, yeah, that's legit. And you're asking what the support is for tomorrow, 337.32? You're a little off on that one. Oh, buy on 510, not tomorrow. Sorry. One moment. You said May 10th here. Changed it up a little. I respect that. On May 10th, 343.37. Beautiful. That's good enough. Well done. Very well drawn. You really absorbed it really well with these lines you drew. During the class, I was getting the dates right, but was off around 25 to 50 cents using TC2000, so I want to make sure I was doing it correctly. Where I get confused would be a pick of Amazon. Let's go ahead and see what you did. All right, see your problem here. I'm not going to even read your email. I'm just going to tell you the problem. So I think that'll help you more. You see this ascending line you drew here? Do not attach the last day of trading ever. You're not allowed to use the last daily candle. And that's what you did over here. See that? That's what you did over here. You used literally the last daily candle. That was the problem there. And let's go ahead and look at your next one, which was Disney. You drew Disney beautifully. That's how you draw Disney. That's exactly how you're supposed to draw Disney. So what was your question on Disney? Hmm. Um, I just don't like your Amazon line, so I don't even want to answer this question because you used the last candle. Looking at the two descending support lines, both are similar in angle. However, the top one's long, so usually higher. I was looking to short Disney on 510 to get the highest conviction. Would I switch to the other descending? Uh, yeah, I mean everything could be conviction based. Again, I can't just keep in mind legally tell you where to buy or sell or short anything. You know, on Disney, you definitely drew it pretty well. And Keep in mind it's also a falling wedge, so a lot of times that's bullish, but that is where you'd run into resistance. Excellent drawing. Excellent. Well done. Ooh, boy. Okay. I just got emailed the Encyclopedia Britannica. You guys ready? I hope we got the letter W. I want to look up walruses. I want to see walruses today. Holy shit! All right. I'm going to read this one very slowly. I'm kidding. All right. Mark, help! Sorry for the very long email. It's a very long email? I didn't even notice. But I'm making up for lost time. I have failed to ask for your help for far too long. That must change, and it is changing today. Thanks so much for the fireside chat last night. I just listened to the recording, and I really appreciate the clear instruction. I love the clarity and simplicity of that approach. That's, again, Newsbeat Show 775. Mandatory for every Newsbeat member to watch that. This is what will be the first in a series of emails to you in an attempt to get the necessary help that I desperately need. I need to write to you regularly, so to benefit others in the Ask Mark sessions, please refer to me as Ready to Grow, which is not my chat name. I'm aware. I have struggled the last few months due to changing market conditions and the fact that Tesla and Amazon are on my do not trade list, DNTL. You mentioned last night that you would typically lose 20 to 30 cents on Tesla options. Yeah, sometimes with your failed front run attempts, sometimes less, sometimes a little more, right? I know that you trust Street Smart Edge to give you price improvement, but I struggle to share the same confidence since I lack the cushion and consistency that you have. When I see spreads of 30 cents or higher on Tesla options and I see it jumping up and down, I fear that I could lose $100 or more on one contract. Anything's possible. I have been unwilling to accept that risk and as a result have sat on the sidelines while watching you in the room make a fortune with that stock, simply doing what I know how to do. I have a question for you. I'm not saying you can do it. I'm assuming you have, if it's only, let's say you have, I can't legally tell you to do it. I would say paper trade it. That. Have you ever thought if you had over $25,000 in account, have you ever thought about doing one share of Tesla per trade? Just sort of market in one, market out one, market in one. I can't, I'm not telling you to do it. I'm asking, have you considered it? You're not going to really lose a lot if you're buying and selling quickly. Where are you going to lose? Dimes, quarters, a dollar? But that would the point would be to grow your confidence. You could paper trade it, do it with fake money first, of course, and then decide if that's how you want to go. I'm embarrassed to say that I've really sized down the last few months since I'm just struggling to break even. I often only take 10 to 20 shares of a stock, avoiding the jumpy stocks and with those big spreads, trying to cap my losses at 10 bucks. I need to average at least $100 per day to cover most of my expenses. God bless you. God bless you. All right. Since, I'll tell you right now, I'm going to share with you some of the mistakes I made. Take Chanel and Hermes off of put that on your do not trade list too. That was my mistake. And that is how you keep your bills low. Um, Trying to cap your losses at 10 bucks. Bro, I need to average at least 100 bucks per day to cover most of my expenses, and frankly would be thrilled if I could consistently make 200 bucks a day. Honestly, that would be life-changing for me at this point. I know that is possible for me to do that and much more, but I am sabotaging myself by trying so hard to not lose money. I have needed help for a long time, but hesitated to write because I knew what you would tell me. How do you know? Focus on only taking smart trades and don't worry about the money. Don't worry about the money is basically the mentality I use of focusing on making the trade correct at the time, knowing your risk and knowing what's happening, and then focusing on doing the trade. And taking a smart trade is what you do best, just so we're clear. And I wouldn't necessarily tell you that, but I mean, you're putting words in my mouth, but let's continue. In my current situation, not worrying about the money is next to impossible. It's like playing Russian roulette and not worrying about taking a loss. Want to know what Russian roulette is? Do you really want to know, like, what Russian roulette is? You ever hear of a company called Brooklyn Immunotherapeutics? This this stock is like, I don't know about roulette, but it's definitely like Russian. But well, whatever. Let's continue with your email. Um, I was with a former guru about 10 years trading a simulated account to prove that I could be profitable and never quite getting there, averaging 1 or 2 cent loss per trade. I then tried prop trading and averaged break even before fees, down a penny or two after fees, and killed with the monthly expenses. I joined your room a little over 2 years ago, switched to Schwab to escape the costs of prop trading. Last year I was down about $500 for the year after everything was said and done. I am very close to Booth-like success and would be thrilled with 1/10 of his profits. But I keep sabotaging myself by avoiding the big movers, dealing with massive psychological toxicity. From 20 years as a struggling trader and 60 years as a struggling human being, and struggling with a persistent fear of failure. I know your strategy's cold and could press the buttons like you, Boof, and others, but my 10 years with the former guru taught me to focus on controlling losses. So I often miss the best trades while trying to figure out position size based on my stop. So you will say that the green take red trigger on XYZ is price X. I will pull up the chart and figure out where my stop would be, calculate the max loss, decide on the position size, then get ready to enter the stock as it jumps 30 or 40 cents past the trigger level. I can't tell you what to do. If that's your process, that's your process. For me personally, that's not ever what I would do. Here's the funny thing about trading. The funny thing about trading is I think people will often do better with chronologically based stop losses as opposed to physical stop losses. If you're pulling up a chart, that's why you can't trade Tesla. Because if you're pulling up a chart figuring out where your stop losses are, what are you going to do? The prior 1 minute candle low? Like sometimes that could be dollars. That could be dollars. I mean, yeah, I wouldn't be willing to take that shit of a loss either. Kidding me? That those aren't as a generalization the losses I take in Tesla. I'm not losing $2, $3. I'm not buying an option, for example, and watching the stock drop two, three, $4 in my face. So I'm with you there. Like I also can't handle that. My solution is more of a time stop. So for me, it's like you buy something, and pretty much. I mean, I explained it really well on the other video, but I could understand what you're going through. If you're trying to have like $10 stop losses, you'll just never be able to trade a name like Tesla or Amazon ever. You can't, unless you're doing common stock. See, if you were doing common stock, that's a different story. If you're doing a share, it's easy, in my opinion, again, make your own judgment, to not lose $10 a share while clicking market in and getting ready to market out of an Amazon share. Truth is, on some Amazon trades, I sometimes I get clipped for 1,000, 1,500 bucks. I mean, it happens, but more rare, but it happens. More likely to make that money. Um, I often miss great trades by a second or less. I know the solution is to just choose a default size, be ready to enter, and willing to exit as soon as it moves against me. You figured me out. Again, my past training with former guru makes me more comfortable having a hard stop under the prior bar and sizing accordingly. The funny thing is, whoever this former guru is, it's so irrelevant of whoever his or her name is, But whoever this former guru is, this is this is this is the gold standard in the industry. This is the gold standard in the industry. And it I've never whoops, put up wrong thing. I'll show you how my system works compared to the system, and I could draw it out for you. And hopefully visualization will help you understand. I can't talk to you about trying to take $10 losses per trade because by doing that, you're probably trading stocks that'll never move, and you're going to have to look for an outsized move. So if you're looking at some bullish, change my brush. If you're looking at a bullish stock here and it starts, going down, then it starts going, up. As it's going up, someone like you is probably using, which is standard in the industry, enter here, stop loss there, take profit here. And that is pretty much what you're thinking. That is, this, I call it the gold standard of Wall Street. And it's one of the big reasons why 98% of people fail. So you're waiting to enter here because as soon as you enter here, you're comfortable knowing that you have a hard stop all the way down here. Psychologically, you're comfortable at this point. Notice that? So that what the the funny is the funny thing is about the strategy is the guru is pumping you up with psychological comfort before taking the trade. And then after you take the trade, that's when things get uncomfortable, which is ironic because psychologically speaking, I'm doing the exact opposite with you. See, so the black line is enter, the red line's your stop, the green line's your take profit, right? Like that's what you're comfortable with, and you hope it goes to the right level. You see, the funny thing is what I'm doing, taking the same. Let's just pretend this is the same chart on the right side. What I'm doing is if here is the trigger, and I know you know this already, but I'm explaining it psychologically. I'm 99% sure you know what I'm saying right now. And here's your entry point, or here's your entry point, or here's your entry point. Notice, I really don't care what it is. But let's pretend that's your entry point. As soon as I enter, my stop loss is like there. You see, the problem with traders in the market with these other strategies is they actually offer you almost 0 cents of timing. You ever stop and think about these strategies? How long am I going to be holding these strategies for? Well, until you get stopped out of your take profit level, right? Well, what if that's an hour, or 2 hours, or 3 hours, or 4 hours, or 5 hours, or 6 hours, or 7 hours, or 8 hours, or 9 hours, or till tomorrow? They never give you a time limit. Me, you always know how long you're going to be in. So when I enter over here, the truth is, I have no idea where I'm going to take the money. I have no idea. It could be anywhere there if I'm right. If I'm wrong, I do know where I'm going to lose. So, in all fairness, as the stock is coming back, up here, pretending the left and right side are the same, and that purple line hits and I enter, I know I'm going to have a quick loss. It's not an exact level because I can't, with 100% certainty, test the velocity. You see, so what I'm doing is I'm adding a factor of velocity and chronology into the stop, something that the strategy on the left has none of. Strategy on the left is simple mathematics. Risk one, make two. And you are psychologically toxic because of Common Tversky's loss aversion principle. And I encourage everyone to read this. Common and Tversky put what's um, they put together what's considered a loss aversion principle, and there's a whole study on it, behavioral and economics and psychology of it. And when you read the loss aversion of Common and Tversky's loss aversion principle, one of the things that I've read on it is that people who actually look for that 2 to 1, which is the gold standard of the industry, are actually psychologically destroying themselves. Because according to Common and Tversky, they believe in, based on their research and findings, that you're going to suffer 2.5 times more from the same number of a loss as you would from a win. In English, psychologically speaking, if you made $100 and you lost $100, the positivity from the $100 would, let's say, be the number one, and the negativity from losing $100 would be 2.5. So when you're actually doing 2 to 1, if you can even bet 50%, which is very unlikely on a consistent basis doing that, you're going to psychologically destroy yourself. So traders who, it's kind of funny, even if you manage to make money at one point doing that strategy, what has actually been going up is your psychological toxicity. You're not going to be able to do it anymore. Your psychology is going to be destroyed. So what I am saying is, don't take Common and Tversky's word for it. If you don't want to take my word, I'm fine with that. This strategy over here does not work. It's psychologically flawed. It's a scam. Not because it's meant to take advantage of you. It's a psychological scam. It's meant to destroy you psychologically. You know what it's like? The build up. This is how I compare it. Anybody ever take a 1 pound weight and just hold it in front of them like this? Like a 1 pound weight? They might tell you, well, that's what you have to do to succeed. And you're thinking, yeah, all right, easy. I could do a 1 pound weight like this. That's easy. But then try holding it there for 5 minutes, and then 10 minutes, and then 20 minutes. Your arm is going to be on the ground. It's going to fall off your body unless you give in. That's the same exact thing that's happening over here. The only difference is, you know how often a Newsbeat Live member says, "Ooh, that was a good loss." They say it all the time. You know how many people feel that way on the left, on this side, on the left side? You know how many people feel that way about this strategy? No one. You're risking $500 to make 1,000. You're risking $100 to make 200. You're risking $1,000 to make 2,000. You're going to feel horrible every single time you take that loss. You do it this way, I could speak on my own behalf. And what do you guys think? You take a loss like that, you feel good every time, even if the stock eventually curves and goes back up without you. Yes, and Elisa is saying it right now. I mean, I don't want to say not because she's a woman, because the women here are the wisest traders on the planet. I'm being real, but she's absolutely right. She said it very eloquently. The more time in the trade, the more psychological hurt to endure. The more potential psychological hurt to endure. I couldn't have said that better. That is exactly right. I'll repeat it for you. What she's saying in chat right now is, the more time in the trade, the more potential psychological hurt to endure. Right. And this trade on the left, you're going to be in that trade for who knows how long. You could be in that trade a second, a minute, an hour, hours. What if it just grinds sideways? With my way, you're going to be up money, you're going to be down money, and that's going to be all she wrote, and that's going to be the end. See, so the trick about trading with low psychological toxicity is almost trying to predict volatility based on technical patterns that are as old as time. Combining that knowledge with velocity in chronology, or speed and time to sound less nerdy, you add a factor of speed, meaning how quick the level 2 is moving, how fast the stock is moving, same shit. And you actually add a factor of time, and now you have a way in which Wall Street has never shown you before. And now you have a strategy that, forget about which one makes you more money on a single trade. That's not what it's about. It's about preserving your psychological capital. It reminds me almost of, you know, look, do you want to do this job for the next 10 years, 20 years, 30 years, or you want to do it for the next 10 or 20 weeks? You gotta keep your mind healthy. Do you want to have thoughts of depression, God forbid suicide, anger, people around you losing faith in you, trust in you, people who have given you that faith and trust, who you feel you're letting down? Is that what you would rather go through? Because I know what that feels like. And it's pretty damn shitty. I'll tell you that. And that's why strategies like this exist. Well, like that. I have to do it opposite. Back to your email. As a result, I end up with 10 or 20 shares. Can't get excited about a 10 or 20 cent move. If I trusted myself to just grab 100 shares with the idea of exiting immediately if it didn't go in my direction, then I would be happy taking a quick 10 or 20 cent move, waiting for the next setup. Actually, for me, I would prefer to sell half on a quick 10 or 20 cent move and put a break even stop in for the other half, moving it up bar by bar to take advantage of a possible bigger move. Sacrificing 50% of the profits on quick moves would be a small price to pay for an occasional home run on the back half. You see, the funny thing I've learned is I find it funny. Yeah, I know you're referring to home run as a larger move in the stock. You want to know what a home run for me is? A larger move in a short amount of time. That's what a home run is for me. Um, but I feel you, and maybe that's what's best for you. I'm not saying what's best for me is best for you. That is why I try to bring out the best in all of you and show you what you do best as opposed to what he, me, she, them, that, guru, her, him, her, it, them, those. It's all about you. One big move on the back half will make my day. Cover my losses. Where I'm at now, I need to set up an automatic 2,000 monthly withdrawal from my SSE account, and I'd hoped to do that a while ago. Instead, have had a $500 monthly withdrawal and watch my $30,000 account drift down to its current level of 26,500. So I only have a $1,500 buffer to keep my margin account above the 25,000 minimum. Again, I can't legally tell you what to do. What if you tried the crazy names? Because it seems like you want to trade the crazy names. You're saying, and again, paper trade it. Do it paper money and then make a decision. But this is what, if you are doing one share of Tesla, you could buy and sell that one share pretty much as many times as you want, as long as you're not, obviously losing your 1500 buffer and going under PDT. The point wouldn't be to make her lose money. The point would be to make her garner confidence. Let's pretend you garnered some confidence. Then what happens if you did 2 shares, 3 shares, 4 shares, let's say you like it. I like the way this feels. Forget about options. 10 shares. Then all of a sudden you're like, I could do this strategy that Mark talked about on Friday, and I could do it with 10 shares. Okay. I don't know what I would have made with 10 shares doing it, but I believe I would have hit the $200 level if I was doing what I did on Friday with 10 shares. I believe I would hit the $200 level at the end of the day through a lot of trades, quick trades. Maybe not you. I believe I would do it because I mean I wasn't trading any Tesla shares to begin with. I was trading options. But shares with such a low share amount, I mean, I believe you'll lose less money on 10 shares than you would one option contract, which is the equivalency of 100 shares, right? Like quasi 100 shares. Thus, even if I break even the next 2 weeks, I'll be down to a 1K buffer in the account, not even considering my bills that must be paid from savings that are quickly approaching zero, an uncomfortable place to be at age 60. Insanity is continuing to do the same thing and expecting different results. Change is clearly needed. As I trust that you can sense, I am ready and desperate for change. I saw how much you helped Booth over the past year, and despite my need for similar help, I failed to write for help for numerous reasons, some valid, some not. I really don't care about your reasons for writing in or not. You're here now. Let's focus on the future. Personal situation. My wife does not work, so I'm the sole source of income and that source has been dry for a long time. I was making six figures a year for years as a project manager, but after being laid off for the fourth time in my career, I decided to focus on trading. Years later, I see that wasn't a wise decision. The former guru convinced me that everyone was successful if they didn't give up, and I knew that I was near the top of the class as far as knowledge and understanding of his teaching. I had an extremely stressful job and was not getting enough sleep. I grimaced there for a moment. The former guru convinced you that everyone was successful if they didn't give up. It's not exactly like that for me. Just putting myself in that. Not giving up is the key to success. Not giving up if you are not successful can lead to being successful. But saying just the context, just like the words, like everyone was successful, they didn't give up, almost sounds like a retention scam. And I don't know, maybe I'm wrong. Was the guru really. I have a feeling this guru wouldn't want to be reading this email right now, trying to talk with you, right? And you're also saying you knew that you were near the top of the class as far as knowledge and understanding. Like, not to say anything with anything here. Do you realize what the top of this class looks like in the Newsbeat live room? I'm not there. I don't think I'm there. I would bet money that I'm not there. I don't see they don't send me their monthly account statements for review every month. Like, huh? I wish I was at the top of this class in this room. I had an extremely stressful job, and oh, by the way, yeah, that's right. You saw that. I had an extremely stressful job and was not getting enough sleep. I would wake up in California at 5 a.m. to be ready to trade at 6:30 a.m. I would monitor and reply to work emails before and after the market opened, and then would rush to work after an hour or two of trading. I would then try to trade the last hour during my lunchtime, which would be 12 p.m. to 1 p.m. Pacific Standard. During my lunchtime on my notebook computer, I would work long hours, monitor and respond to emails at night, and was lucky if I got to bed before midnight. Yikes. Work was a highly toxic. Sounds like a typical Japanese school student. Hardest workers on the planet, getting like little sleep and like phenomenal grades. That would, some people, I'm not built like that. You know. Work was a highly toxic environment that I desperately needed to escape, so when they laid me off immediately after the highly successful completion of an extremely important project for the company, it seemed like the obvious point to finally say goodbye to corporate America and trade full time. After nearly 10 years with that company, I was near my breaking point emotionally, so something had to give. So while it was shocking and disappointing that my trading did not improve after going full time, in a lot of those ways, that was a necessary transition to avoid a mental breakdown. I can understand and respect what you're saying. To reduce expense, but okay. To reduce expenses, my wife and I moved to Arizona since I could trade anywhere. And we rented a house that the landlord claimed had good internet. It's actually a very important question. It's kind of funny you went there. The new beginning we expected quickly turned into a nightmare as we learned that the internet was horrible and the available options were worse. See, I so he's a 60-year-old. So I'm trying to think of like, you know, a lot of 60-year-olds aren't going to be like a 20-year-old and ask like, do you have FiOS? Do you have how much megabytes up and down? He took the word of the landlord and unfortunately probably asked the wrong question. The landlord wasn't really qualified to answer it. And the available options were worse. I finally installed a T1 line. Holy shit, is that pricey? Remember back in the late 90s when you had a T1 line? Back in the day, if you wanted the fast internet, get T1 line. Man, pricey and slow, right? Paid around $400 a month for 1.5 megabytes downloads and upload speed. 1.5 megabytes per second, $400 a month. Even that internet provider had problems, sometimes dropping too much, lower speeds. I think Fios, what does Fios charge me? I get cable, phone, and internet like around 270 a month. I think I get 1,000 megabytes per second down. I think I get a gig down. Um, Even that internet provider had problems, sometimes dropping too much, lower speeds. We finally had them identify the problem as damaged wires in front of our house. Once replaced, I was back up to a solid, reliable 1.5 megabytes per second for $400 a month. As a result, savings quickly disappeared as my income remained at zero. There were also no technical jobs available in the remote area we moved to. I was always on the verge of trading success, so I persisted. Meanwhile, my mom lived alone in Cali and was steadily moving to the point of needing assistance. It was a growing problem with no clear solution. I was visiting her for a week, twice a year, and it was sad to see her decline. She finally could not live alone forever, and she did not want to live in a home. Finally, about 3.5 years ago, after driving back to Arizona from visiting her, I woke up the next morning with an idea. Due to the discrepancy in real estate prices, my mom could sell her house and move to Arizona. We can move in and take care of her. Such a beautiful thing to say and do. God bless you. Could you? I'll put it this way, just for some of you younger people there who don't understand who are watching this now. Do you know what it's like? Could you imagine being, I mean, he's 60. How old do you think his mother is? In her 80s? Unless it was like the year, 1850, where you got like married and pregnant at, 15, 16 years old. I mean, his mom is probably like in her 80s. Imagine being in your 80s and you're just sitting there and it's just like you're in California alone. I would want my kids to take care of me in my latter part of life. I hope and I pray that I teach them well enough the importance of that. For you youngins out there, better think of the same thing. Don't leave loved ones alone like that. If you have an estranged relationship, that's a different story, but if you're tight, you don't let that shit go. I woke up due to the discrepancy. She could sell her house, move in, take care of her. Wasn't easy, but we managed to help her sell her house and buy a house more than twice the size in Arizona, with her pocketing 100,000, almost 100K in the process. She's now, yeah, I was about to say she's in her 80s. She is now 89 years old and doing well financially. God bless her. She just needs daily assistance, which my wife and I provide. God bless both of you. Um, she is better off than ever financially, and our monthly expenses were more than cut in half, so it's a win-win situation. But due to her increasing dementia, there is almost constant psychological toxicity that I have to deal with. My wife is a trooper and very supportive of me, but it has not been easy on her, and I deal with a lot of guilt as a result. The bottom line, the only thing stopping me from trading success is psychological toxicity and fear of failure. I have persisted for many years in the market, but built up a lot of psychological toxicity in the process. Your room has been a lifesaver, but I am not quite where I need to be. Break even does not pay the bills. $100 a day would stop the bleeding and be a huge help. $200 a day would be awesome and a life changer. You know, I just, for you guys who are making the stupid money in this room, for all of you who are making the stupid money, I want you to really absorb in this email when you're sitting there. Oh, market sucks. I'm up like 1,000 or two or three or 4,000. I'm up like 4 grand. It's just a little shitty day. I'll just wait for the market to get good. I'm telling you, that money for somebody like this, 100 or $200 a day, put into perspective how fortunate you are to be in a position where you're able to make the money that you are. Never forget that. $200 a day would be awesome and a life changer. I could live happily ever after at that level. And frankly, once there, I know it would increase. The solution? Yes, I am ready for a change. The cautious fear of failure approach has not worked, so I think I need to bite the bullet and jump into the deep end. I know how to swim, so spending any more time in the wading pool just doesn't make sense and is proving to be counterproductive. I like your suggestion to focus on just one strategy I like focusing on, only one or two stocks each day. I find that by jumping from stock to stock, I often take subpar or late entries and miss the really good setups that work best. I really liked your fireside strategy that you used yesterday, and I wish I had done the same. I wish I'd done the same for the past year. If you were focused on Facebook or Apple, I would have joined you. But Tesla was enough to keep me away, except for a few 5-share attempts to test the waters. All right, so you did try shares of Tesla. I had mixed results because I skipped the best setups and tried a couple low conviction setups. One time I immediately placed a stop after entering a trade. See, I can't tell you what to do. I don't do that ever. You know how many hard stop losses I placed? And again, to each their own. There are people who will swear by doing this. It has nothing to do with lack of discipline, quite the contrary. It's because I'm disciplined that I'll do it. You know how many hard stops I put in the market yesterday, last week, last month? The only time I put in a hard stop is if I'm hell bent on holding a position and I have to take either there's an emergency, which I'll usually sell out, or I just have to take the most massive dump of my life randomly, which would be rare. And I want to hold the position and I'm just going to place a stop loss so I can go do my business. Like those are the only things I could. All right, so you immediately place a stop loss. And as the stock moved up, I went to lock in a small profit. I canceled the original stop and I was entering in the new stop, but the stock plunged below my original stop, so I ended up taking twice the expected loss instead of locking in a small gain. That was pretty oddly specific. It was a Thursday. Um, my bad. I should have edited the existing order instead of canceling it and starting over. This was one of the fluke drops in Tesla all day, and I caught it. It was it was Taco Tuesday, but yeah. Um, but I see what you did the day before Thursday. I'm on to you, Eddie. No, it was yeah, it's good. Um, look, this is why I don't do manual stops. I'd rather just sell and take the loss, whether it drops or not. Just get rid of it. Anyways, fear of fail. And again, I can't legally tell you what to do, nor I wouldn't. So, for me personally, I feel that I, in my situation, would try one share and get used to comfortably taking the quick wins and quick losses and just moving on. And then once you're good with that, almost develop a new system is what I would do. I can't tell you that you should do that. I would never tell you not to do what you're doing, just so we're clear. Anyway, fear of failure and psychological toxicity are keeping me from doing what I know to do and what I know I can do. I think the solution is start asking for your help with this in future emails. Bite the bullet and trade Tesla or whatever your top daily pick is for the fireside strategy. Trade only the fireside strategy, skipping news plays until I'm solidly and consistently profitable with a comfortable buffer. Focus on only one or two stocks at a time, preferably only one or two stocks per day. Trade two option contracts, exiting both immediately if it goes against me, and selling one on the initial pop while immediately committing to break even on the back half, and then manually exiting on the first bar over bar break based on the 1 minute stock chart. That's your strategy, okay. Only trade the first 90 minutes and the last 60 minutes of the day unless Mark is trading a stock with good fireside chat setups with plenty of time to evaluate and enter the trade. Focus on trading smart and executing properly while trusting the P&L to take care of itself. I'm afraid to take a big loss on any one trade, but if I take 10 solid fireside strategy setups in a day, so he's saying fireside strategy as the Newsbeat show 775. That's in your portal, guys. It is hard to imagine not being solidly green on the day if you take 10 of them. I would have personally for myself a hard time imagining that. For 2 years, I have failed to take advantage of your extremely generous free mentoring for members, even while watching Boof go from zero to hero with your help. I want to and need to be Boof too. Okay, before you actually want to go down there, we have a lot of work to be done if you want to be Boof part two. I mean, I know you're married. We're gonna have to get you like an online dating profile. It's good pictures of you. It's gonna be a lot of work, but I think you're referring to the trading part of Booth too. And while the sequel is never as good as the original, I would be thrilled to achieve 1/10 or 10% of the results that he has achieved this past year. For now, consider me ready to grow. With your accountability and kind expert assistance, I know that I can and will be successful. I am more than ready to make that happen now. Thanks so much. Ready to grow, not my chat name. P.S. Here are affirmations that I got from you that I repeat to myself multiple times a day using my real name, not ready to grow. Ready to grow, you are a consistently profitable trader. Ready to grow, trading is a game of percentages and probabilities. Ready to grow, you have confidence in your strategy. It is easy for you to print paper. Ready to grow, you are patient. You wait for the right opportunity. Ready to grow, you control your emotions in regard to profits and losses. And he uses his name obviously instead of ready to grow. Ready to grow, you only take intelligent trades. Winning is okay, losing is okay, sitting on your hands is okay, breaking the rules is not okay. I mean, wow. What an email, bro. Wow. Um, whew. I mean, what a beautiful email. I mean, I think you uh, did a great job really sharing with me the situation that you're in. You shared with me that situation that you're in right now. And you're taking care of your mother, and dementia is definitely a serious condition. So um, I wanna shoot you props for that because a lot of respect taking care of someone who really needs your help. So I have a lot of respect for you for what you did. And yes, your email's long, and I'm glad you had the courage to reach out. And look, there are a lot of people here who just benefit from listening to your email. And just keep in mind, just even attending these meetings has also been helpful. It seems like you have a lot of ideas how to grow from the situation you're in. And it's going to be beautiful to see how you progress now. Jedi Mark. Jedi Mark. Have they earned a Darth Vader voice, Eddie, or should we just move on with the email? What do you think, Eddie? How's the crowd looking tonight? Haven't been focusing in. Anyway, I'm writing you today with a dilemma. For reference, I am trading from a small account, mid four figures. I missed out on a trade today that could have doubled to tripled my account size with low risk options. There was a red dog reversal long today in Tesla that I've been waiting and focusing on all week to happen. I know that this is not your strategy, it's Red Dog's strategy, and that I should not be looking back on it with regret. You shouldn't do that regardless of whose strategy. But psychologically, I feel beat down. I did have my best day scalping, making about $43, and then I stopped trading about 8:30 a.m. Pacific Standard Time, which is 11:30 a.m. Eastern Standard Time, because of the regret I felt from not taking the one option contract that went up a few grand. Even though I had my best day scalping, I still feel terrible. I need your help. What can I do? So you have your best day and you feel like shit. Interesting. But I feel you. I understand what you're going through. I'm still struggling to figure out how to scalp better. On average, I'll be up around $15 to $30 at most. If I'm red, I have recently been down $15 to $40 occasionally, close to $100. I was down $100 about 3 times. I usually take one contract of every company, and almost every trade I take are the trades that you call out in the room. All right, so just keep in mind the trades I call out. Well, I'll roll with that. I mean, fine. It's no, I feel you. Just keep in mind there are a lot of trades that I'm calling out that I'm ignoring, but all right. My account is about. I'm not sure exactly how you meant that. My account is about $4,700. How much do you think I should tier? I cannot tell you in your life situation how much money you should bet per trade. On earlier days of the week, I trade higher volume calls, rarely out of the money. For example, on Monday, if Tesla is trading at 700, I'll be trading the 750 calls. To me, that is way far out of the money. On Thursdays and Fridays, I'll trade about the first to fifth out of the money call. That's a little better. I understand Mondays are harder. If I want to be a trader, I know that I need to make more than what I currently make and lose less. Do you think that I should trade a different strike? I can't tell you what I think you should do. Me personally, if I had a, let's call it a $5,000 account, you're at 4,700, right? And this might not be what you should do. If it was, I'll give you an example. I bought Tesla calls overnight, so um, shameless promotion. I share overnights that I do in the Newsbeat live room as part of the service. So right over here, you see. So I bought next week's 710 calls on Friday. First option out of the money, which is expensive. Not an earnings week for Tesla, but like, I mean, these are already next week's first out of the money call. $17.59. So the question is, if I had a $5,000 account, would I spend $17.50 to scalp a call on a Monday? Yes, I would. I can tell you that you should do that. Okay. Also, for some reason, many of the trades that work well, I sell too early. All right. Any other tidbits are appreciated. Your amygdala in your brain has a very good way of remembering what could have happened. Then you probably start fantasizing, I would have made this much if I held one contract, right? Me? I'm not looking at my Tesla. I don't know how long my longest Tesla trade was, but most of my Tesla trades were probably sub 1 minute. Seconds. If yeah. Here are my trades from today. First trade Tesla, 1 minute no eliminate, sold marked. Accidentally did not front run, so you fucked up. Excuse my language. That's okay. It's very important you know when you effed up. Tesla front run. All right. So when you front run, you did well. You accidentally didn't front run once, and then you lost on the one trade you messed up and didn't front run on. That's fine. As long and this is your account. Let's see what you did here. 740, 1340, 1510, 4480 minus $1. So you made $43.50. $43.50 on small option contracts. And you know what? I understand you're not here to make $43.50. I will tell you, you just made 1% of your account value on a $4,700 account. 0.97 and change, but let's not be dumb about it. You made 1% of your account. I mean, okay. I also noticed that you took your first trade after 10 a.m., 10:16, which is fine. I thought a lot of the morning trades were hard, so I see right here acquired open date. And it's kind of hard to see the link you sent me because it's kind of blurry, but most of your trades, I mean, I see you have a trade here, last 20 seconds, 19 seconds, 20 seconds, 14 seconds, and 4 seconds. I like the fact that the trade you screwed up on and you didn't front run, you threw away early and got rid of. Very good sense of discipline on that losing trade. I like what you did. I don't know how I like the numbers for what you were trying to do. Yes, I realize on a day where Tesla keeps going up that you could have made more money by buying one of those calls, running full speed into a concrete wall, giving yourself a concussion, and waking up right before the close to sell out. I get that. You would have made a shitload more money. Okay. Does anyone want to guess how much money I would be up if I was holding every single one of my Amazon calls that I bought when Charlie Gasparino last Monday tweeted the Amazon split? Does anyone want to take a guess how much money I'd be up if I held it till Thursday? Who gives a shit? Who gives a shit? Woulda, coulda, shoulda. I think you're producing nice numbers. I think you it was like 10%. I'd be on the board, right? All kidding aside. Yeah, I don't think you did bad. I gave you my thoughts on what I would do. I can't tell you what you should do, but I mean, you're new here and stuff, obviously, bro. I could tell. I like what you did. I like what you did. I don't find it that bad. I do not find what you did that bad. All right. So I know I didn't get to everyone's email tonight, but I will. And I did get sort of, whoops. I did get sort of caught with a very lengthy but a very beautiful email tonight. And I just want to leave you with some positivity and maybe some words that could sort of help you based on these emails. And it's almost like, you know, the gentleman who's in Arizona taking care of his mother with his wife. The struggle that you're in today is developing the strength that you need tomorrow. And I know a lot of times you are probably contemplating quitting, or even if you fought against it, it crossed your mind. And everything that you've been to with the 10 years as a guru, or whatever situation that you're in, it's obviously different than the gentleman. Whenever you feel like quitting, you have to think about why you started. And instead of investing your energy in a lot of the bullshit out there, invest your energy into something that's going to end up contributing to your growth. You see, despite what people think, people look at me and, oh, look, you have so much strength, Mark, in the market and whatever. And strength doesn't come from winning. Your struggles develop your strengths. And when you go through hardships and decide not to surrender and to change and evolve, that is strength. That is where the strength comes from. That is where strength comes from. Negative thinking cannot and will never produce positive results. Be strong because things can get better. It may be stormy now in your life, but it never rains forever. Okay? Never forget that. Never forget that. And give something a fair try. Give something a very fair try. You want to know what I think the most important human trait is? Anybody want to guess? The most important human trait, ladies and gentlemen, is optimism because it allows us to evolve our ideas, to improve our situation, and to hope and work and create the better tomorrow. Your hardest times in life will often lead you to your greatest moments of life. Keep going. Tough situations build strong people in the end. And when you're going through this tough time, one of the big difference between me and whatever other gurus you've been, following is I'll be there offering you my guidance, my hand, my support whenever you need it. That's the difference. Yes, I don't change the weather. That's what gurus like to do. They pretend like they can change the weather. Like you just do this strategy, everything's good, everything's easy, yada yada yada. Bullshit mathematical, psychologically devoid equation I'm going to share with you. Boom, you're in. I'm the one telling you it's still going to rain tomorrow. It's still going to get sunny the next day after. Let's figure out how we can overcome that as to pretending that it's not there in the first place. Positive thinking is more than just some stupid cliche phrase or a tagline. It literally, physically, scientifically proven changes the way we behave. And I firmly believe that when I am positive, it not only makes me better, but it also makes those around me better. I hope you guys enjoyed this Newsbeat show. Happy trading, make money, and I will see you guys tomorrow morning on the Newsbeat live trading broadcast. I love you all.